Friday, October 6th, 2023. And now we have a payroll came out this morning. It's better than expected, defying expectation for. So the treasury yield went higher and the market started coming down. In that sense, how much is it down? Well, it's down 0.5%. 120.1 points down 200 points. So yeah, so this is doing its thing. That's not much. Well, today I have some analysts call on Netflix, Nvidia, Exxon, Walmart, Disney, Eli Lilly, market movers. Vulcan material. Okay. Yes, no idea what some of these are to tell you. Browsing at the news. The all-important 10 years yield has spiked, and that got Wall Street Bank and Payroll really nervous. Yes, that would be. Take a quick look. Still inside the bar on stocks. Down 0.5% on the border market index. Haven't make new low yet, so still kind of holding up. Dollar yen's still pretty buoyant. Let's look at the 20-year treasury. Yeah, that gap down really. Right? So we have this move, very nice move. That was a short, never get a chance to get it off, and it collapsed. The momentum is still there, making new low on the MACD indicator. So yeah, that's not pretty at all. Right? Dow Jones like all red across the Heikin-Ashi candlestick pattern. The DJIA spider that's continued. The volume just there's no. Okay, Nasdaq's holding a bottom. So when it turns, these Nasdaq is the one that's going to turn more faster and higher relative strength wise. So gold trades, even gold is coming off. Traditional is a safe haven instrument where the market craps out. Go to gold, go to bond, but yeah. So yield goes up, the bond goes down too. So that hurts everything across the board. Oh, Apple is in the green, huh? In the green on the Heikin-Ashi, actually down 0.5%. Google is the one in the green, up 0.4, right? So we have a very good chance if the market turned to break this new high. It's in the green today. So on relative strength wise, you have potential. Potential up. It's in the upper portion of the downtrend channel, so that's promising. But everything is Meta. Meta's down 1%, but it's flat in actuality. Tesla. Tesla cannot stay above this yet. Netflix, making new low already. That's why you want to go for this peak, right? So that's the level. This peak here. Peak and the low. Okay. Technical wise, on the technical front, things are still a little gloomy. Not ready. I mean, Tesla yesterday, as I said, was thinking, oh, it penetrates. We took a trade, but the border market sector is not in the clear yet, not in the bull territory. So I held off, and that was a good call, because when the market comes back down, you're gonna have this. Just go with it, and So, yep. This is why you want the market behind your back when everything turn, all the indicator, most of the indicators setup is coincide with expectation. Then you have a trade. Otherwise, you have to be patient, just like what's going on today. So I don't expect much actually on a trough front. Yeah, these guys just going sideways now, not doing much. Let's take a look at Lee. Okay, it's holding this pattern, so that's fine. Expand. Okay, yeah. And so that's a quick look, very quick look on the Heiken Ashi. Back to here, the big list. Oracle, not doing much. NVIDIA, so what's NVIDIA doing? Just being there, just sideways. So just waiting and waiting for everything to turn rosy again. Right now, the economic data is not helping. Fundamental is not there. The macro environment is not there in that sense. So look at that. Just 7 largest stock in the S&P 500 returned 92% this year, 92% because of the trend. And it's normal for it to give back in a sense. These the 7.7. And so I tend to collect and save these articles. So remind me, serve as a reminder for save this. That's good. Yeah. So nice run. That's a good run. So that's that. For this is trying to do a little bit. Nothing. This is smart start. Market making the biggest move. Tesla's down 3%, but relative fly is still an inside day on Tesla in that sense. It's down 3%, but the bar is still within the reason level. And then you have this compressed triangle. So yeah, you need to move out of these resistance and support line to make and then momentum move with volume to show its hand. Otherwise, you wait. But yeah, you wait for it to do a few momentum move of consecutive days and then let it pull back and then end the trade when it turns again in the direction of the trend. Yeah. Those are the better trade, higher probability trade. That's always what you want to look for, what I'm looking for. I mean, even investment wise, you still want to wait for the trend to establish, and then you want to find your setup, find the proper setup, and then start layering and compounding all the way up. And just like the article, 7.7 had a 92% run this year. If I wasn't lazy or I was on top of it and switched into my risk mode, where I do more of the trend following and compound up, I will have captured a very nice return already. Yeah. But I was a little more focused on the ultra high probability trade, and however those are just it comes with territory, less risk, very little risk, and very little gain. That's how it goes. Right? So you may kind of like what I call candies money, right? Doing those. But when the time is right, everything's lined up, you want to go for the big bucks. You have to go out there and take the risk. GM dropping out, strike for whatever reason. Financial is just nothing there for the financials. Yeah, so it means no news, no headline, no macro coverage, nothing going on those sectors. Then there's nothing. There's no major move, no trend established. So again, only 30% of the time the market will be trending. And that's if you're in the right sector, the right stock too. Right? All the SAMIs, the AI related, the Magnificent Seven, those are trending this year. But other sectors, banks, the credit cards, right? Those are dogs. They're just nothing. The autos, right? Those are dogs. They might run a little and then they reverse. Yeah. So you have to go where the money is. Right? That's a big part of making money is you need to confirm where money is flowing into. If you cannot even determine where is money flowing into, right, then you cannot construct a good macro picture. You cannot construct and see the undercurrent, what's pushing on the bottom. That's the foundation. So you have to see where money flow first of all. That's very important, I always say. Warren Buffett, his theme is regardless of that, yes, because he's 30 years old, we buy good companies, right? How many people really do that? Only your 401k account would do that in actuality. Right? So you want to latch on one of these trends? These nice trend? Well, look where money's flowing, right? GM has a nice run, very nice run. Right, and then do a double top, right? But that's GE. I'm sorry, that's GE. Right? The reason behind it, I don't even look. I actually have a long-term holdings on GE when it's back in the 20s, 30s range price. But then I stopped looking at it after that because it's something I just pack away in that sense. Yeah. But otherwise, this year is all about AI. I'm just waiting for the next big breakthrough in AI and where they're going to start ripping up again, all that. And then I'm going to play my hands and, make my next bucket of gold, basically. But have to be patient. So right now, nothing much fundamentally. Yes, there's some economic news depressing the market further because it pushing the 10-year yield up a bit more. But other than that, that's just nothing really ripping. No stock is outside 5% range or even maybe 8-10%. If one of those Magnificent Seven stocks, right, the Tesla, the Nvidia, the Google, the Meta, those guys start making a 5%, 8%, 10% move intraday, something's going on, and that's where everything is going to get affected. That's where there will be trades, very likely will be triggered. Right? Of course, that is also the stock market, the global macro, the U.S. macro environment supporting it. Right now, we don't have that. We have this concern over yield continue goes up, and that make cost of borrowing for businesses very expensive, and that cut into not only the ability to borrow money for capex, capital expenditures, but also to, if they have floating rate loans, then their loan will pack to the prime rate as continually goes up, and that will affect the bottom line too, in that sense, because the interest rate continually goes up like that, and also when they roll into in the loan, when one loan expire and then roll into another business loan, long-term business loan, like a short-term one, the cost of borrowing is so expensive, so prohibitive that they have to find other source, or they just it's just too expensive, so they have to cut on other places in order to service the loan, in order to continue revolving their existing loan into a new one that's expiring, right? Or issuing new bond at higher prices, corporate bond at higher prices. That all cut into the cash flow at the end of the day. So that's why all the stock market is depressed in that sense. The prices are depressed because the valuation is much lower now. Until this yield get resolved, until this potential inflation in the background that this macro picture is behind our back, that will continue to hurt corporate earnings, and that will continue to hurt the stock market in that sense. And so the macro environment is just a lot negative right now. Right? And yes, maybe, who knows when it's going to turn. I don't make my job is not to make prediction. I make projection, but not to make prediction. That's two different things to me. Okay, projection is based on past data, the likelihood of something to continue to happen. Right? So that's projecting. Prediction is just, yes, I love it data science based, but you're just predicting. It's a flip of a coin to me all the time, and who knows? Right? So I don't try to pick market problem. That's what I'm trying to say. Or try to pick market tops. When it tops out, it tops out. When it bottom out, it bottom out. So it will show me. I need to see confirmations. I want to see buy comes in. That's the bottom. I want to see making high on the day on the bars. That's telling making new highs is going up. That's that. That's confirmation technical. And then I can also find the fundamentals behind it, the reasons behind it. Now with these two fundamental combined technicals, then have a good setup. Right? Then I can make reasonable projection, educated guess, in that sense. Anyhow, so yeah, the market is just doing its thing. I don't see any news fundamentals or any numbers coming out that will be substantiate for the setup yet. So still the waiting game continue, and I've continued to wait. So today's Friday, I guess, unless something exciting or something really start moving, that's about it for the day and for the week. And we'll pick up over the weekend maybe, or if there's something of interest that came out over the weekend. Otherwise, we'll roll into next week, and then Monday just start again. Okay. Thank you for watching, and have a great weekend, everyone.